Okay, thank you everyone for staying. And interesting thing is I have very little experience actually doing a roundtable or interviewing people. So I can only guess that they chose me as the very last presenter because, I think Krista knows that I'm soda alcoholic. And so you guys are not gonna be late to the wine in the other room if I'm the last person who's doing this thing. Okay, and so what I like to start in this roundtable is today. So far, we talked a lot, and I think, in fact, both of you did an amazing presentation. And the reason why people should be in this industry is because the slide decks that people in this industry make are excellent, and but it's very much focused. I feel in the consensus that used to exist among investors and among pundits in the past few months, but several months ago. But what happened in the last several months is that this consensus that people had, that looking into the future, both the regulations and investor demand is going to gradually and steadily push towards sustainability, this is increasingly under attack. Because, of course, there's Trump, but also even in the EU, we have seen in recent times the farmers were protesting against the recent changes by the EU Commission and so on. So where I want to go today for this talk is I want to focus on, given some greater uncertainty about what the future is going to hold for the sustainability industry, what you guys think. Okay, I'm going to, and I took very diligent notes during your presentations so that I can have very specific questions. Okay, very specific questions. So, since Peter is sitting closer, I'll start. Okay. So, first, Peter. So I noticed that you're a farmer. Okay, and some of these people who are, protesting were also farmers. So what I want to know is, to the many people increasingly in the EU who might be pushing back against the sustainability initiatives and circular economy initiatives, how do you convince them, as a farmer yourself, how do you convince them given the costs that, that some of these initiatives have on them? How do you convince them that, in fact, the future should be more gradual, more a movement more towards sustainability as opposed to, well, so far it's been very costly for us, so maybe we should take a U-turn. So how do you convince them in that?
Okay, yeah, very specific question. Cool. I think first of all we need to differentiate which farmers do we wanna convince that they need to be more sustainable. I think you're talking now about the probably Central European farmers. I think that's the scope you're taking. If I'm answering it very shortly, there is two options. Either you go with quality or with mass. And I think, let's say, when we talk about, let's say, Central Europe or in general Europe, we only can, be sovereign with quality first. And second is we can only go with we need to be independent, as we saw, nutrition sovereignty was something which was tricky to get or tricky to hold on to our, in the time of COVID. So I think we also need to kind of teach the customer, the consumer, that it comes with a price tag if we want to have regional nutrition, regional products. That's my answer to that. Am I answering it fully for you, or
perhaps maybe a short example on, in your own experience as a farmer, as a consultant, something that you told people that seems to have changed their minds. Maybe this could, clarify for me and maybe some people in the audience.
You mean that they still keep up with sustainability, with the sustainability
Yes.
change? I think that they get it very easily if I clarify for them that if we continue with this and their ground of production, namely their earth, their humus and so on, their weather conditions will be changed if we as a society do not change. So they try to hold that back as well and try to contribute to a more sustainable agriculture with that argument.
Yes, thanks a lot for that. And now, actually, a very similar question on Ewelina. It's not as specific because I noticed that you're very clearly very experienced in talking about ESG and talking to audiences about it. Now, in this particular audience, it's something that's very, I think, people here tend to like ESG. Now, have you spoken to audiences that are maybe not as partial to ESG, and what did you have to do to break through with them that makes them start thinking, oh, this is something that maybe I should start supporting?
Thank you. I think that my previous experiences at CDP, which is the largest disclosure environmental platform, they collect a lot of data and provide also a rating that drives capital markets. We had a lot of workshops with companies on their supply chain emissions and how to tackle them. And they struggled with setting science-based targets on scope 3, which is those indirect emissions, because the biggest argument was there's no decarbonization paths. And we didn't have the answer, because indeed, a lot of these industries don't have decarbonization paths. But I've also seen really cool companies, and now I'm really blanking on a name of one of the German and Scandinavian energy provider, but they had a really nice mindset, and I used it as an example. I don't have a empirical proof that it worked, but the example was that they said, we didn't think about how to decarbonize without the target, because if we only went and thought about how we decarbonize, we would never set a target. But when we did set the target and it became public, then creativity just spiked, and they actually achieved their target a decade before the deadline. So I think that what we always try to do was to bring examples that were more fluffy and inspiring, but then at the same time show some empirical proof that there are ways to decarbonize your scope 3 emissions, and some of the ways is engaging with your supply chain, and you create some sort of domino effect, because if they have to decrease their supply chain emissions, they also work with their suppliers, and then it just continues, and at some points those paths also show up. I hope that provides a little bit of insight and answers your question.
Okay, that's great. And we also wanted a couple questions. But before we get there, I want to ask, because this is for Ewelina first, but I think it's to both, well, you gave these examples of firms like AstraZeneca and Salesforce actually really pushing even their suppliers to become more sustainable. Now the question here is, are they doing this because of some profit motive? Like, do they think the sustainability will make sure that they can get more customers? Or is it because they foresee that there is going to be more regulatory action, and for that reason they want to, preempt it? So my question is about what is driving these firms to try to, push for circular economy, for greater ESG compliance, and perhaps you can also add a little bit on how does the current uncertainty about how policies are going to be in the future compared to perhaps what we thought a year ago, how does that fit into whether these companies are going to keep on pushing this or not?
Good question, complex one. I only can assume why certain companies do it, and it's a mixed bag of reasons. And I think some of the reasons I mentioned is also access to capital, it's winning more business. I think that there was a recent research by PwC that 41% consumers are picking sustainable products more gladly, and they can even pay more. So there is plethora of reasons why companies would do it. Some companies are also just purposeful by DNA, and that also exists in the society. I think that maybe I will just give a different practical example that I discussed at home the other day. Who here drinks Vienna wine? Raise your hand. A wine from Vienna. Come on, don't be shy. We all do. Good. So imagine you have $100,000 and you want to invest it into a local winery. How would you evaluate whether this winery will bring you profit? Would you start to think only about how many bottles of wine they sell in a year and how many can they produce? Can they meet the demand? You would actually start to think, Vienna is getting hotter. we already know that there is less grapes growing here. We know that gemischte Satz is the result of climate change, and gemischte Satz is a type of wine in here. And you would be like, okay, so if I pick the winery, I want, I don't know, 20% return on this, right? So I will look at those that use use water efficiently. I don't know how wine is made, so if I say something crazy, don't judge. But you would look at machinery, the water usage, whether they have good suppliers for everything, whether they reuse the bottles, they bring them back and do them again, or they do something with it. You would look into those areas as well, because you would want the investment to bring you returns. So I think that those companies look into those areas because A, they want to prevent going bust. 2, if they put money somewhere, they want them back. And 3, because we don't want to, replenish the planet from all the resources. So again, plethora of reasons, and I don't know if I went too far with this, but I hope that answers 2 questions in one.
Thanks a lot. And exactly the same thing to Peter, except perhaps because you're from a different, you're not as much in the finance background. So in your perspective, why are companies doing this circular economy, and how does this uncertainty lately going to affect how these companies push for circular economy in the future?
Yeah, I think, as Ewelina mentioned, there's a plethora of reasons why companies do circular economy and why they do sustainability, and of course, it's also both of them are very vague terms, because when does it start? When does it end? I would say, of course, when the market is like putting them in a corset of regulatory obligations, then of course they do it. So like you have two ways of thinking it. Like either it's somehow incentivized or it's somehow sanctioned if they don't do good. And so in terms of they don't do good, it's not that much sanctioned anymore after Omnibus in Europe. So I think that's tricky. So the other way of why they do it is because they believe it's the right thing to do, of course. Yeah, so a lot of idealism. And of course, there are also some business models which are easier to or where it's easier to be a circular business model, and other business models like a bank or a service provider where it's a bit more tricky because you only have an indirect effect on circular economy. So again, you can only enable. So to make an example, for example, if you are a bank, it would be desirable to also bring products to the market where regarding specific circular economy principles, they are assessed and evaluated, and if companies behave like that, then they get better grades, better terms.
Okay, so this part I found to be very interesting. So just as the last questions before we open to the audience, so to each of you, do you guys have, even with the so Ewelina mentioned, for instance, the winery industry, which even no matter what happens to politics, it seems that okay, there's going to be climate change and there's going to be some things you have to do anyway. So in a similar way, do you guys see, each of you, do you see what types of industries or what types of businesses are the ones that are most insulated? Sustainable businesses that are most insulated from what happens to politics, that perhaps if someone wants to invest in something sustainable, but you don't want to know whether in 2028 or 20 in some other years of some elections, what's going to happen, you just don't want to worry about that, then what is the type of a business or what's the type of an industry that you would invest that's sustainable and it's also insulated from politics, insulated from policy uncertainty? So, I mean, whoever can think of one first can go.
What do you mean by insulated?
As in, it's an industry that's becoming more sustainable, and even if there's no carbon tax, even if there's less or more regulations that try to push companies to be sustainable, the profitability of that industry or the growth of that industry is not going to be affected too much. So this is what I have. Like, imagine you're an investor and you don't want to deal with the uncertainty of politics, what is the type of an industry or what's the type of a sustainable business that you would put your money in?
If I knew that, I would be rich. I really don't know. I think that if I were an investor today who would know the markets and know where to put the 6 digits and stuff like that, I would do the due diligence. So if I looked at industry A, I would see how are they prevented from climate change. But honestly, on spot, I cannot tell you. I am not as educated in that area. Sorry, just due diligence, think about what makes sense and how could this business prevent themselves from climate change if you bet some money.
I would say probably in an industry where there's a lot of material, a lot of resources in it, because in this field there has to be more change. And these principles, the circular economy principles, need to be stronger integrated in that field. So I would say invest my money in innovations in this industry where a lot of resources are traded.
Okay. So that's great. Now I'm going to open the door, so open the floor to questions, because you know, there's enough of random questions from me. So.
Thanks. Thank you very much for excellent panel. A couple mini questions. Is Europe moving in the same direction as U.S. seems to be currently in terms of ESG and CSR? And another question is, how do you best convince the companies that you are interfacing with that if they could emphasize these values, that it's good for their shareholders? Thanks.
Does it work? Yes. The first question, I think, how to say it? Ursula von der Leyen, I saw somewhere on LinkedIn, said today or yesterday that in Europe we don't have oligarchs and we don't have bros. So I think we are not going in the same direction as US potentially. But with the recent omnibus changes, so how European Union is trying to cut the reporting requirements, I think they're trying to overdue on cutting the burden. And like I mentioned, maybe in the presentation, probably not as directly, they're trying to simplify how companies report on ESG so that they spend more time doing the stuff and not just report on the stuff, because I think this was the risk that they were trying to avoid. And you know, and by mistake, perhaps they were worried that they will inhibit innovation. So to answer the first question, I don't think they're going in the same direction, but probably Europe is on a hiccup of making some mistakes. But don't quote me on that, I'm not an expert. And I lost your second question, can you repeat it?
Yeah, sure. What can you do when you interface with companies to convince them that what you're doing is in their interest of their shareholders as well as society? And does that mean you have to have them look at beyond a quarter to maybe 10 years or something like that? What arguments do you guys use? Thanks.
I think the first argument would be which investor already asked you about ESG data and what did you do about it? And then to have an understanding where the pressures are coming from. If they are not receiving any pressures, I would be very surprised, because almost everyone received the pressure today. The second thing I would do is maybe refer to the two questions I had on my slides, is where do you see which sustainable matter would actually bring you more money, and look into this perspective, because everyone is looking for returns on the investments. So looking at that and then call out the research on showing exactly how many loans you can get, how many projects you can win, how many bids you can get, will your employees be more happier, and do you mitigate many risks? So I would look into very specific things that are relevant for that company. So addressing their concerns in a nutshell. Hope that helps.
I think there's nothing to add.
Would someone else like to follow up?
Yeah, thank you very much. I have a question. I mean, I'm here. So I have been following the conversation and it's interesting. I think one thing that when you keep on reading the reports, like you see there is a strong tension between the economy and the environment. And I think we sense it in the room as well about what do you tell shareholders to make them give way to like much more becoming green as a company. And then one report I read said that companies are not retiring their old machines in line with their ESG targets, but as they age out. So like companies have targets, but then they are not decarbonizing in line with those targets. It's about what is old and then they just change it, right? So my question is along the lines of how do we ease this tension that exists like naturally between making profits and also saving the environment. I think you mentioned something about the EU kind of backtracking on their reporting. And I think it's sort of the EU trying to make Europe much more competitive because the US is now going all out against ESG. So how do we do this and like how do we make this make sense?
So your question is basically how do you reduce the tension between the economical and the environmental issues? Okay, yeah, thank you for the question. I think, wow, that's a tricky one again. I believe that in hard times, like when the economy is that under tension as it is right now, it's of course more one-dimensional that companies act. We see that they do not invest that much anymore into sustainability services, into circular economy services, and so on. I have to correct myself, probably more into circular economy because they see that their business model is probably also a bit obsolete sooner or later. So yeah, very tricky how to reduce the tension. I think it's always in doubt. They will always, or many companies will always go for the economically more viable option. Again, I think there are some business models which act after environmental principles, and if it's not ingrained in their strategy, then the environmental part will probably lose. So starting with ingraining and with hardwired sustainability principles in their strategy, I think also sets kind of the line to also behave like that. I do not have a very precise answer to that, I need to say. How would you answer it?
I see it as a tension between the fact climate change is real and we want short-term profit. I really don't know how to answer that question, but I think acknowledging the fact that climate change is real is already a big deal, and perhaps we are missing it in everyday life.
Yeah, but I mean, we can also like answer it with as human in general behave, right? So humans are very short-term oriented. We probably need to overcome that biases in our society. It starts with probably awareness, and after awareness, teaching, and after teaching, mastery. But tricky to overcome that biases, as we see it in everyday life.
There is also another question regarding the sustainable business models, right? Maybe you could give us some examples of the ones which are like maybe non-standard, interesting ones. Yeah. Could you please give us some examples of sustainable business models of the future that most of us may not know, right? Some are maybe the ones which are not standard, maybe even counterintuitive in a way.
Yeah. So sustainability business models in general, which you do not know yet. Of course, let's boil it down to maybe a sector. What I like a lot is the topic of food waste. So we know that approximately the food which is produced from this food is approximately 30 to 40% is thrown away, so a lot. And this contributes to approximately 10% of greenhouse gas emissions. So to like start with reducing food waste is a big lever in general. And then you can have a look on the supply or on the whole value chain. And if you like just try to pick one part of the 5, 6, 7 steps of this value chain of food production, and you start with, for example, gastronomy. In gastronomy, there is a pretty cool business model, which is also connected to your topic today of AI. And what they try to do, it's Kargl, and Kargl, for example, is trying to reduce the food waste in the hospitality sector. How do they do that? They have an hardware and software solution which measures all the plates which come back in their kitchen, and after you get back from a huge restaurant or a huge hospitality place, after you get back 1,000 plates a day, you can get with this photography basically and with this scale an analysis of which kind of food was wasted this day. And this just started, this startup, and if you scale this up and say, okay, we're gonna use that in each gastronomy, in each bigger gastronomy, and we also scale it not only from, I mean, it was started in Switzerland, not only in Switzerland, but also use it in the whole of Europe and continue with that. I think this will have a big leverage, and it's quite underestimated so far.
Thank you very much. Here we have a question. No? Not anymore? Okay. You had a question? No? Okay. Then
If you want to reduce waste, you can download the app Too Good To Go, and you can screen your restaurants in the neighborhood and order the leftovers. It's very cheap, and you can save restaurants from throwing away food.
Thank you very much. My question is regarding companies and actually fulfilling their climate goals. I feel like many countries set goals, but the fulfillment rate is yet to be 100%. From your personal experience, do you see an increase there? And if yes, what are those driven by?
The increase of not met goals.
No, the increase of the companies actually meeting the goals and not only setting them.
Oh, good question. Since I left CDP, I have not looked at the latest stats because Science Based Targets actually releases the progress dashboards, or at least they did until 2024. Maybe I would twist it differently. I think it's okay when companies don't meet targets because there is no straight path to meeting them. But what's important is that they have the targets and they report annually transparently on what they are doing and why they didn't meet them. And I think that's already a massive progress, and we should reward that and not only scrutinize that they didn't meet the goals. Because what I notice is that when companies are scrutinized for not meeting the goals, they shy away from talking about it, they shy away from sharing learnings, and they shy away from setting the targets. So if the discourse is made more positive in we tried, we failed, we continue looking for the answer, come help us, I think then we will see more companies setting targets and meeting them.
Thank you very much.
Yeah. Okay. Okay.
It's not my question, but somebody's listening in online from Slovenia, and he didn't get recognized. So here's his question. In respect of ESG, we're basically discussing external costs. Are there any costing mechanisms we can adopt so that these external costs are actually borne by those who are causing them? Thanks.
Yes, perhaps on that. Yeah, good.
You can also go ahead.
Yes, just to broaden it, just what's your favorite policy tool? It could be adding costs, it could be anything.
right now I do not have anything concrete in mind.
Some companies put a price on carbon, a ton of carbon they release, for example, from travel and business travel. Yeah, then they use this money to either donate it to something that makes sense and helps the nature, and not the opposite. But I do actually like this, and I remember one of the companies I worked with, they had a policy that if there is a train and it takes you 3 hours to take a train instead of 40 minutes plane, you take the train. And I think if those companies also, you know, have the internal carbon price, these two combined, policies and internal costs, are a cool way to also maybe gamify how to limit emissions. But I don't know if that answers the question. However, this is a cool policy that I found working.
Yeah, and maybe to add, I think we should rethink about, or we should rethink offsetting, because it's actually already happened. The external negative effect. I think that price of offsetting needs to be increased, as otherwise we just continue as we did ever before. Yeah, just to add that to the carbon pricing. But other than carbon pricing, I'm also not that aware of other mechanisms so far. Yeah.
Okay, thank you so much. I have first, I think it's a kind of comment rather than, but I have questions for both. At the first, I want to say that actually the United Nations have this sustainability and finance guideline. It's called UNGP. It's which is stand for UN's guiding principle for the sustainability of economic, which is 137 pages, and then in the nutshell, I can say that there's 3 pillars there. The first is to the duty of the state to protect, the responsibility of the company to respect, and the remedy if there is occur like violations of human rights, also about damages for the environment as well. So the channels for the remedies must be available as well in the country. So, but this is in the country context, meaning like the state must be provide this 3 of the channel. And I would like to first the question to Ewelina, because you're talking about the supply chain. I think it's very relevant nowadays, because what we can see, a lot of companies, for example, in the US, they're having like creating a very complicated structure in their company. The parent company, for example, in the US, and then they have a supply chain in Bangladesh. Let's say it's textile company, and this happened like you in your slide, that there is a collapse of the buildings of the company. And however, if we want to apply who will be liability for this cause of this collapse of the building, maybe in Bangladesh law can apply for this whoever who managing this in the Bangladesh, right? But how about the parent company, which is based in the US? How they can liable? I mean, in political power, US will say, wow, why you want to catch my I mean, like my businessman? No way. I will not give you my, I will not apply Bangladesh law to my US citizen, simply because they want to protect the citizens. Second, because the company structure is very complicated, and it's make very difficult to, how do we get who is have liability to responsible for this cause of, you know, the damages or the violations of the human right, like can say, like in your slide. This is also the problem. What do you think about how we can resolve this? Maybe some idea or something like that. And for Peter, the question is, on 2023, I think WWF having a report that because we're talking about financing the future.
For the you know, respect of time, because we did technically run it. So would you repeat the question for Ewelina, and maybe they can both answer it, or something like that?
Actually, it's a little bit, but I will make a quick question for Peter, just a little, because it's different. Because for Peter, I was like want to emphasize the financings, because you're talking about financing the future. So in WWF, having in 2023, have a report that a lot of banking's industry finance in based in EU, Europe Unions, finance a project in other country who violates human rights right there. For example, in they polluted the river. They finance the project in the Peru, and those project is polluted the river. And they also finance the project in the Manila to build a new airport. However, those airports also as displacement of indigenous people in the new airport of Manila. And also they have also in Paraguay, deforestations. It was all of this is funded by the bank in the EU, but sometimes we want to taking care of Europe Union, let's say ESG, blah blah blah. But your industry of your banking destroying another country. So what do you think about that? Thank you so much.
Okay, so I think the questions are, so first for Ewelina, so how do you make sure that the parent companies respond to sustainability infractions in downstream in foreign countries and some subsidiary or a supplier, and then for Peter. Okay, I didn't quite understand the question for Peter, but we can take it definitely afterwards. And yeah, so Ewelina, do you want to start from that?
I cannot answer to the liability part. That's the legal world of those things. But I think that if you turn ESG reporting from just ticking a box, yes, I called my factory in Bangladesh and they said they fulfill all the safety regulations, you'll not achieve anything. You should send someone there. You have actually, you should go there and ensure that the rules are met, and if they cannot meet the rules, why they cannot do it, maybe you help them and then you invest in the factory. I think that you need to turn into a valuable exercise where people actually are on site and ensure that the factory fulfills all the requirements. I don't know how many companies do it, but that I think is the point that I tried to somehow emulate, that it cannot be just a ticking box exercise. It has to be done properly at a strategic level. So if you do a questionnaire, you don't just ask yes or no and believe as it is. And I hope that helps. But I know these are discussions actually in those large organizations when they look into their supply chain, how to make it sure that whatever you ask is actually the truth that you receive.
And to your second question, very, very briefly, I think your idea was when human rights and like ESG parameters are neglected by European banks, what's my solution? I think European Central Bank needs to set rules that this does not happen again. And I mean there's a lot of discussion about like this brown penalty factor or brown penalty fee, and something like this needs to be implemented because, as you said, this just cannot happen in the future anymore. Yeah, this is in a very brief way. Thank you for asking.
Great. Yeah, thanks a lot. And that's it. Thank you for sticking around. And Krista will take it from here.
So thank you very much for your attendance at the conference. I hope you enjoyed and you got a few inspiring thoughts or thought-provoking issues. And I suggest you to continue with the questions and discussion behind the doors. We prepared some drinks for you, so please grab a glass of wine or beer, and then continue questioning all of the presenters today. Thank you very much.
Tony, thank you.